Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate news. This time, we are going to be looking at Perella Weinberg Partners' latest 10K report, which, if that name doesn't ring a bell, they're an investment bank. Does that mean we are going to have to sift through financial numbers and legal jargon? Maybe, but we are going to try and make it interesting. So, what exactly does Perella Weinberg Partners do? Well, they are an advisory firm, meaning they give companies advice on big decisions. Think mergers, acquisitions, basically when one company buys another, and restructurings, fixing a company's finances if they are in trouble. Their bread and butter is offering strategic advice across different industries and international markets. Now, they are not like those giant banks that do everything. They pride themselves on being independent, avoiding the conflicts of interest that larger banks might have, and that independence is a big selling point for them. Let's rewind a bit. It's important to understand their structure to understand this whole report. Back in June 2021, Perella Weinberg went through a business combination. This basically made PWP OpCo, which is like the engine of the business, jointly owned by Perella Weinberg Partners, some partners, and some existing partners. In December 2023, there was an internal reorganization, and then in April 2024, another internal move happened. All that shuffling around matters because it affects how things like compensation and ownership are accounted for in the books. Now let's talk numbers. For 2024, Perella Weinberg raked in about $878 million in revenue, but here is the twist: they had an operating loss of roughly $78.5 million. This was mostly because of something called amortization of equity-based compensation awards, basically expenses tied to stock given to employees, so it's not really a cash issue, but it looks bad on paper, and this was a trend. They had operating losses in 2023 and 2022 as well, largely from the same accounting quirk. Moving on, let's talk about what makes Perella Weinberg tick. The key to their business is attracting and keeping talented people, which is super important in an advisory business. They want the best and brightest, whether that means promoting from within or hiring from outside. As of December 2024, they had 511 advisory professionals, including 66 partners and 48 managing directors, spread across 10 offices around the world. Finding and nurturing that talent helps them expand their services, deepen client relationships, and ultimately grow their business. Like most companies, Perella Weinberg is talking about environmental, social, and governance, or ESG issues as they put it. Their ESG efforts cover everything from reducing their environmental impact to promoting diversity and inclusion and maintaining strong corporate governance. They even have a cybersecurity program in place to protect sensitive data, which is really important in today's world. Now let's hit on what could go wrong, since every 10K has a risk factors section. Market conditions are always a concern. If the market tanks, deals dry up, and their revenue takes a hit. They also depend on a relatively small number of fee-paying clients, and because their revenue is tied to the completion of deals, which can be unpredictable and out of their control. Plus, they face competition from larger firms, risk of employee misconduct, and the ever-present threat of getting sued. As the business grows outside of the US, there are risks too: different regulations, currency fluctuations, all these things can impact the revenue. Regulation is a huge deal for any financial services company, and Perella Weinberg is no exception. They are subject to rules from the SEC, FINRA, and other regulatory bodies, both in the US and abroad. These regulations cover everything from anti-money laundering to data security, and failing to comply can result in big fines, penalties, and damage to their reputation. They also have to navigate tricky legal areas like the Foreign Corrupt Practices Act, which prohibits bribing foreign officials. Here is where things get a little technical. Perella Weinberg's main assets are their partnership interests in PWP OpCo, and it depends on those distributions from PWP OpCo to pay its bills, things like dividends and taxes. There is also something called a Tax Receivable Agreement, or TRA, which requires them to make payments to certain partners for tax benefits they receive. In certain situations, the payments under the TRA might be accelerated and exceed the actual tax benefits they get. Their ownership structure also presents some potential conflicts of interest, since VoteCo Professionals controls a significant chunk of the voting power, which means the owners have a lot of say, and that control could lead to conflicts of interest and less favorable terms to other parties, as the controllers have less of a need to negotiate everything arm's length. On a brighter note, the company reports that cyber threats, including any previous cybersecurity incidents, have not materially affected or are reasonably likely to affect us, including our business strategy, results of operations, or financial condition, which is what you would expect from a professional financial firm. Checking the market and shares situation, Perella Weinberg's Class A common stock trades on the Nasdaq under the ticker PWP. They also intend to pay dividends quarterly to their shareholders. Now looking at the financial condition, they have access to a $50 million revolving credit facility with Cadence Bank, which can be used in case of financial difficulties. A revolving credit facility basically means they can borrow money up to $50 million and repay it, borrow it again, during the term. However, this also comes with some restrictions that may impair their ability to spend or grow. For the financial year, the net income attributable to Perella Weinberg Partners was negative $64.7 million, an increase of $17.223 million in the previous financial year. In February 2022, the board approved a stock repurchase program which the company can use to repurchase its shares of Class A common stock. In March 2024, they issued 5,750,000 shares of Class A common stock at $12 a share, bringing in $66 million after taking out some costs. Also during the year, we have paid or accrued about $86.6 million in settlement of certain professional partners awards. As a final note, it's also worth mentioning that companies like Perella Weinberg have to ensure internal control is maintained to make sure all numbers are reported correctly. Failure to maintain this control can have big financial consequences. Alright, zooming out now, what can we take away from all of this? Perella Weinberg Partners is clearly navigating a changing market. They are making all the necessary investments to grow and get bigger while dealing with legacy issues from its past deals, but the key is for them to continue to make money. They are profitable, but they face a host of external risk, like any business. Overall, Perella Weinberg looks like a fairly solid firm in a tough industry. By expanding their services and managing risk, they seem to be positioning themselves for long-term success. Is Perella Weinberg a company I'd invest in right now? That depends on what you are looking for. If you think that advising people on billion-dollar deals is a sound business in the future, it may be worth investing. Thanks for watching. If you enjoyed, please subscribe, like, and comment. See you in the next video.